Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and analyze what's going on with the SoFi Technologies stock. So we've made a lot of videos so far regarding SoFi. We went ahead and predicted it when it was overvalued around 20. And then we went ahead and around $4, we said it's a great buy. Overall, if you look at its performance thus far, it's hasn't been really doing too hot. And we're going to go in and determine what's going on and give you an analysis from a TA standpoint. So stick around. You're definitely going to enjoy this video here. So overall, the first thing I'd like to do is set up the definition of what is a mid-cap company. So mid-cap's market cap usually range from $2 billion to $10 billion. Okay. SoFi Technology sits around $7.09 billion at the curation when I was doing this PowerPoint here or this presentation for you, indicating that it falls within the mid-cap territory here, right? Or the category. So if we examine the ratio between large caps and mid caps, we can observe a recent trend where large cap companies are outperforming mid caps. So what this means is if we take large caps, which is the S&P 500, and divide it by mid caps, we can look at the ratio, right? So we can literally divide ETFs on top of each other to give us some information. And we can use technical analysis to help us to figure out what's going on with Wall Street and where is money being cycled into and out of, right? So if the ratio is high, it means that more money is flowing into large caps. If the ratio is low, money's being flown into mid caps. So if you don't recall, in October, we had a tremendous, amazing rally in the stock market, hence why this ratio is going down. You're like, wait a minute, but if it was a rally, why is this going down? Remember, if in this graph, the line goes up, it means large caps are winning or outperforming. If in this graph, the line goes down, it means mid caps are performing. SoFi is performing, right? So I'll give you an example. If you look at 2022 on over to 2023 here, mid caps were outperforming, and then right in the near Octoberish 2023 here, we had an increase in large caps. Then we got a decrease in small caps, and now large caps are taking over. Okay, so from an RSI standpoint, we seem to be cooling off on the increase of large caps. Now, how do we know this? Well, if we just look at large caps in general, we can see that the RSI is overbought, right? So let's just go ahead and focus on the mid caps. S&P for again, this is the S&P 400 ETF, and what I see here is it's tracking along either this support line, which is right around the 50-day moving average, right? So we could be in for some more downturn in SoFi because again, this is the Vanguard S&P Midcap 400 ETF, and what it's showing me is that we are potentially resetting RSI. The RSI was overbought and it was in this territory, and now it's correcting itself so we can get higher highs and higher lows. It's a normal market phenomenon. If you look at SoFi Technologies, though, it's corrected even much more. It was extremely overbought in the territory here, and then it went ahead and now is resetting to an oversold territory. So again, these are the times where I'm actually really looking for good deals and essentially dollar cost averaging my position. Even if I got at a higher price, like my average will go higher based off of these prices, considering we talked about it near the $4 region here. It's still a great deal, in my opinion, right? So we expect it to stabilize once the mid caps stabilize and once large caps have their cooling effect in the first half of 2024, given our presidential election cycle analysis since 1950. The reason why a lot of these small caps and mid caps are actually falling is one is because they're negative free cash flow and they're unprofitable right now. But we know that story is going to change for SoFi, right? We know that they're about to become profitable, okay? So overall, if you go ahead and look at the 10-year Treasury yield index, it broke out of our first resistance line. Now we're looking at the 50-day simple moving average on stacked on top with our secondary support and resistance line and our resistance line, and we're tracking here the RSI, and we do believe that once this gets to an overbought territory, if it even gets there, we should have a cooling down effect once we approach and get more information from the Federal Reserve. So there's a lot of graphs here, but just kind of bringing everything together. As a result, we're witnessing price drops as investors sell some of the winners from the previous year, such as SoFi and Palantir. Price drops. We in terms of we talked about that. Then we talked about market trends, looking at large companies outperforming mid caps with that ratio I told you about, and then we went ahead and looked at the overall trend in regards to the small mid caps and also SoFi. So now let's go ahead and take a look at large caps here, okay? If we look at the S&P 500, you can see that we're still near the overbought territory, which means that we should hopefully be resetting market breadth. But again, we still believe that we're up and due for a 52-week high and all-time new high in the coming weeks. And then after that happens, we do believe we're going to go downwards until the second half of 2024, meaning that we might still experience pain, all dependent, obviously, until SoFi goes ahead and reports and knocks it out of the ballpark. So again, by looking at the RSI for the large caps, we do believe that the positive pressure of large caps increasing is getting too far overextended to where the value from a technical analysis standpoint and a fundamental analysis standpoint for SoFi to keep decreasing, the probability leans that SoFi is going to taper and find a new bottom. Now, regardless of that, whatever price drops that we see, I'm welcoming it by a buy, right? Because again, you can hit this multiple angles. If you're not a long-term bull, this is a great day trade. You can make an easy 20-30% once the stock recovers from its technical analysis grid. And if you're a long-term bull, you already know why you are, right? I think that doesn't take that much convincing. So if you look at the Vanguard Mid-Cap ETF, I'm looking at the 50-day moving average as a potential support line. Obviously, if this breaks, then we're gonna be in some world of trouble, and we expect mid caps to underperform temporarily before they most likely will rebound. But we don't think this is the case. We think that the 50-day will hold, right? Now, these are support for all the folks that have stayed this long watching. We want to thank you. And we wanted to give you guys some information regarding an artificial intelligence technical analysis grid point that gives you support and resistance lines for SoFi Technologies. So in the hourly chart, which is right here, the hourly, we see a support line at the $7.31 region. So potentially we could get a bounce right back off here. And I love doing this because once it gets overextended, I know I'm like, you know what, this will be a good trade. Okay, now we should be falling down. You can see it tried to bounce, rejected. Okay, it falls back down. So now we're looking at here. So we can potentially get a short-term run or a further test of support of 731. But if this goes ahead and falls, well, okay, well then we're going to have to go ahead and look at other support lines such as the day. On the daily chart, there's a $6.86 support line, which is right here. So we have one right here. So in the end, this seems like it's fairly, once it hits, it goes back up, meaning that there's a lot of buying pressure here. Lastly, if let's say that fails, we have a weekly support line at $6.38, which is right around here. So if this goes ahead and falls, we could be trading kind of this, near the $10 region down to that $6.38 region. However, if we do end up falling again here, which I highly doubt, you can see that these sessions are they don't really last a long time. And if we get them again, well, then I'm going to welcome that with open arms, because that's just free money pretty much, because we know this company's not going anywhere. Okay. So that's kind of the analysis there. So I'll be looking at the support line here because that's the most recent one that's going to touch. And then if that fails, I'm going to be zooming in on this one. And if that fails, I'm going to be zooming in on this one by paying close attention on this one as well. So hopefully this makes sense for you guys. I hope this was very helpful, kind of giving you a 30,000 foot view. Because if you were to look at, SoFi Technologies on the Google News or what have you, I don't think people are going to give an in-depth analysis by using data-driven approaches. Now, again, this was from a purely technical analysis standpoint. If you want to hear our fundamental analysis standpoint, we recommend looking at our prior videos. We are going to be doing an intrinsic value calculation, which then takes an estimated free cash flow of revenue of 5%, going 10 years into the future and discounting back at a 10 to 15% discount rate, divided by the number of outstanding shares, which gives approximately, I would say, a value of anywhere between $6 to $15. But we'll go ahead and show you guys regarding the short term what we believe for SoFi. We did a long-term price analysis using a historic price to sales utilizing Bank of America growing at around 26.42%. And that was in our last video. And we got a price of near $100 in 10 years. So we definitely believe there is fruit to be made in this play. And we're very confident in SoFi's ability to capitalize, especially given the historical performance of the CEO. So, ladies and gentlemen, if you enjoyed this video, please smash the like button, subscribe, and I will see you on the next one.